Welcome, thanks for tuning in today. Today we are going to be talking about the impact of rising mortgage rates on the housing market. Thank you for tuning in, let's get started. Welcome to today's show. What we're talking about today is the impact that interest rates are having as they rise in the housing market. And what we're seeing right now is that we're seeing interest rates are approaching that 5.5% mark. I'm getting a lot of questions from my clients. I'm getting a lot of questions from people that I associate with on what's going to happen. What are we forecasting? What are we seeing? And as we watch interest rates climb, as we watch them increase, we're seeing some effects in the housing market. I want to break those down with you so that you have the ability to have the right strategy and the right education as we move forward, whether you're buying or selling real estate. So as we roll into this, I think that it's important that we establish what we can be looking at to give us a forecast and to watch the trend that we need to be watching to understand what's happening and why is it happening within the interest rates. So if we look back historically over the last 50 years, 30 years, 40 years, what we're seeing is that interest rates move parallel with the 10-year Treasury yield. So if we look at the Treasury yield numbers in the bond, we look at the Treasury bond and we look at how that Treasury yield number for the 10-year is moving, we can be forecasting up or down for mortgage interest rates. Now, when I say mortgage interest rates and using the 10-year Treasury yield, I'm talking about the 30-year fixed rate. So if you're looking at a 15 or a 20 or that's part of your strategy, there could be some variables in that, but the 30-year fixed rate is going to trend with, and historically has trended with, the 10-year Treasury yield. So as we dive into that, I think it's important that we recognize that rates are going up because the yield is going up on the 10-year Treasury bond. We're seeing rates, if we compare 2018 and 2019 to what we're currently seeing, we're seeing that we're higher. So we know, and for those of you that have experienced buying or selling in the last 3 to 4 years, you've seen a large climb in values because of supply and demand issues, and we can talk about that on a different episode. We're also seeing an increase in rates, and we're seeing increased rates for a hedge against the inflation. And we've talked about inflation and how that's affecting you, your households, and will continue to do. As much as none of us like rates going up, they need to, because we need to stabilize that inflation. We don't want to hit a hyperinflation period. So interest rates climbing can be a good thing. We just need to figure out the strategy to help you leverage if you're selling, to be able to target and have more buyers interested, or to be able to, on the purchasing side, have more leverage to win when you're purchasing. So let's look at rates as we compare it to the last 5 decades. So we're looking at a 50-year window. We're looking at the 1970s, 80s, 90s, the 2000s, and now the 10s and into 2022. So as we look at this, we're currently lower and still at a historic low at 5.5 over the last 50 years on the average. In the 80s, we were seeing the average at 12.7. In the 2000s, we were seeing the average at 6.25. We're still lower than that at 5.5. So again, great time to be buying and selling. We simply need to figure out what's the strategy for you that's going to work best to help you win. One of the things that we can talk about when we have a strategy session is exactly what's going to be best for you as we strategize. I want you to keep in mind that who you work with truly does matter. Interviewing and selecting the right person to work with you, it is critical. So don't forget, who you work with matters, and now more than ever before, the strategy that you use and that you employ to win is what rules. Thanks for tuning in. Have a fantastic day.